Welcome to the Crypto Prism channel. Let's take a look together at the latest Bitcoin market price action. On the daily time frame, this blue downward trend line. Besides bullish traders repeatedly emphasizing the need to watch it for bearish traders, this is actually the timing to look for short opportunities. Recently, as long as we see false breakouts around the trend line, we can consider shorting Bitcoin. So what kind of candlestick close would allow the next bearish trend to continue? Does Bitcoin really have a chance to break above the trend line, move to 97,000 or 98,000, and give bulls an opportunity to exit at the top? We'll later analyze and share this with you. From a candlestick perspective, if you haven't subscribed to our channel yet, you're welcome to subscribe. Let's first take a look at the recent funding rates. Funding rates are the most honest companion in a ranging market. When you're unsure whether you should chase longs, like here, when Bitcoin briefly broke the trend line, you might think a bullish trend has arrived. But you need to look at the funding rate, or 0.01 is considered a normal level. When funding rates are at normal levels, we should not chase longs. If you chase longs at this level, once the US stock market opens, you'll get trapped or even stopped out directly. Because when you open a long position here, this is very likely where your stop loss will be triggered. Because this is also the most conservative stop loss level. And as a result, when US stocks open, price gets pushed down, so it still comes back to the same point. When funding rates are at normal levels, there's no edge in going long, especially in a ranging market. When funding rates are close to zero, or even close to negative, then shorting also has no advantage. 2026 is almost here. Write this into your trading plan for next year as an important factor to consider. Alright, let's return to candlestick analysis itself. First, let's look at the daily chart. If Bitcoin closes with a bearish candle, forming a gravestone doji, that is a bearish signal. You might say this type of candlestick has appeared many times. Yes, but it depends on where it appears. If it forms near key support or resistance zones or around important curves, it is effective. If it appears in random areas, then it really doesn't mean much. It may just lead to continued consolidation. This is what we need to pay attention to. We need to watch carefully. Whether the daily candle closes as a bearish candle. If it appears near the trend line and forms a false breakout, then on the daily time frame, an upside fake breakout means we should look for liquidity below. You'll notice that many analysts use various indicators and on-chain data. I don't deny that those can be useful, but I believe trading is ultimately a mathematical game. If you use a systematic, rule-based approach and can stay consistently profitable, that's what allows you to survive long-term. For example, if in 2025, you were firmly trading only altcoin derivatives, I believe very few people would still be alive today. Now that we're approaching the end of the year, I suggest viewers make a plan. Export your past year's exchange trading data, and see clearly whether you actually make money on spot trading and lose money on derivatives. Some of you may also trade options. Check which methods make money and which don't. If crypto trading truly doesn't make you money, I suggest you just keep your money in your pocket and wait until Bitcoin drops to a level where everyone is calling a full-blown bear market, then execute a dollar cost averaging plan. That is truly the only reliable way to make money in the crypto market. So focusing on this level at 86,334. After the false breakout, I believe the next downside target lies below at this area. Of course, this is also because we already have short positions. Next, let's look at the 4-hour candlestick chart. What are we looking for here? We look at the previous time price approached the trend line, took liquidity from the prior high, and then formed a false breakout engulfing pattern. What happened afterward? It completed the liquidity grab. We can pay attention to this. After liquidity was taken, price rebounded. That means the first stage of fake breakout liquidity grabbing is done. The second stage is right here. Think about it. For long traders, if they didn't stop out at the first point, then this is where they will . So this level is where we need to pay close attention to whether the situation becomes tricky again. If it repeats the same behavior here, then this kind of trading environment is indeed very difficult. Okay, the next 2 days are the weekend. If price consolidates here until Monday, it can still remain around the 87,000 level because price always moves to the right. And moving to the right doesn't only mean going up. It can also go down. If price continues moving right and then downward, the trend line will extend further. Okay, what we are waiting for is a break of the trend line, but what I'm even more interested in is whether it can actually move downward. Okay, it already took the first major pool of bullish liquidity around 83,600. If you're bearish, pay attention to this level. What I hope to see is that it doesn't directly take the prior low liquidity, but instead forms a double bottom rebound and then sells off again. If that happens, there's a high probability of a 74,000 scenario. According to Elliott wave theory, 1, 2, 3, 4, 5. By the fifth wave, spot buying becomes attractive. That's my medium to long-term view on Bitcoin. Of course, some people are also hoping for a trendline breakout toward 98,000 or 99,000 to get short-selling opportunities. That would also align with the upper boundary of the channel range. So in recent market conditions, if you want to go long, don't chase near key trend lines. It's easy to get trapped by false breakouts. It's better to look for opportunities near the lower boundary of the range. Also, if you're especially bullish, you must look for long opportunities near the lower boundary. Not just shout bullish views without mentioning risk. This helps avoid blindly chasing breakouts and getting hurt by false breakouts. It's normal to psychologically lean bullish or bearish when trading. But if you ignore actual market conditions and stubbornly wait for a specific level with arrogance, problems are very likely to arise. That's all for today's video. See you tomorrow.